Hello and welcome to our April 2013 Smart Buyer Alert webinar. I'm Jeremy Wilstein, the young guy.
And I'm Ed Knapp, the old guy.
All right. And we're presenting to you from Park City, Utah. It's April 25th, almost the end of April.
Yep.
And I was actually just in Moab this last weekend, biking and hiking and skydiving and dirt biking and having all kinds of fun. Ed, where were you?
I was down in Vegas in the Red Rock area running a 50K for about 6 hours.
How many miles is that?
That's about 31.
Jeez.
But who's counting?
Who's counting? You stopped counting after 10.
You don't remember anything after 10.
But anyways, we're kind of here to show you that it's shoulder season in Park City. People are getting out.
What a great time and what a great place. Park City is central to the deserts, to the mountains, and even to the ocean. You can get there pretty quickly from here. It's just a great location in the west. So let's figure out a way to teach these people how to get out here in Park City and buy some real estate.
So our topic for this evening is entitled Spring into Action, very fitting for the time of the year. And we're going to talk to you about why we think this is a great time to get into real estate, and frankly,
there's so many indicators that are telling us that this is an ideal time to buy real estate. So let's go into it.
All right, so as we alluded to, resorts are closed. They closed about a week and a half ago.
The trails are opening. We still have snow in the upper reaches, but everybody's starting to bike and hike on all the trails.
Town is definitely quiet now during the shoulder season.
A great time to come visit us because there's not much traffic and usually there's discounts at most of the eateries.
Yep.
And real estate, like this rider in this picture of Park City, this is where we live, real estate is climbing and we want to go over that with you.
All right, so we're going to jump right into it. One topic we're going to talk about is the nightly rental properties here in town. People that do nightly rentals, they're entering a time of the year that we like to call this carrying season.
So what is the carrying season?
So during the winter months, most of the nightly rentals make the majority of their income. And then as we get into the spring, summer, and fall months, there's not as many rentals. So owners are actually paying more of the cost.
And they're not getting rentals in until the summer rentals come along, which aren't as strong as the winter.
Yeah, exactly.
So they're more likely to listen to a buyer and his possible offer on the property. Is that correct?
So if a seller has had their property on the market throughout the entire winter and it hasn't sold, this time of the year is usually when they kind of come to their senses and are willing to negotiate a bit more because they don't want to carry it through the summer months.
And that's why we call it the carrying season. The second thing we want to talk about in the spring into action is the single-family inventory is definitely depleted. And when we look at the under $700,000 for a single-family detached home, those have become a hot commodity here in Park City. You can still do them. In fact, I think a couple came on the last day or two that were in the $400,000 price range. They would be excellent investments for almost anybody buying here. And I would think that they're going to appreciate very well in the short term, especially single-family residences seem to be a hot commodity in that price range.
Yeah, to do long-term rentals with. And then finally, we're going to show some market data that does confirm buying signals and does confirm the real estate market.
Yeah, there's quite a bit of market data we want to share with you very quickly. And all the data is telling us that this market is a great market to be buying real estate in. Let's go over that.
All right. So first off, one of the market signals you hear all the time, interest rates are at historic 50-year lows. Everybody knows this. We put this graph on to show this, where the interest rates started in '63, rose in the early '80s, and now are below 4%.
It's absolutely unbelievable. If you look at this chart and you look at the 6% interest rate in 1963, and right now we're doing an owner-occupied at around 3.5%, and probably most of our investment properties at around 4%. It's not going to get any better, folks. There's never going to be a better time to finance real estate right now.
And Ed, you actually just did a blog on this subject?
Yes, I did. And if we go to the next page here, Jeremy, there's the blog at the bottom, but let's cover some quick information here to put this in perspective. In January 1995, a 30-year fixed-rate mortgage was around 9.5%, and if you borrowed $300,000, you were paying about $2,522 a month for interest and principal on that loan. Today, at around 3.5%, to borrow that same amount of money is $1,347.13. So that's a savings every single month, as long as you have that loan for 30 years, of $1,175.43.
It's almost nearly 50%.
Yeah, it's quite incredible. So again, we have the blog down there at the bottom where you can email us and we'll send you that recent blog and we'll be happy to share that with you.
All right, great. So we'll let Ed go into the next one.
Well, the market signals, so we've talked about the interest rates at 50-year lows. Let's talk about real estate increasing in values. We have about 3 or 4 slides we want to share with you. Every single one is going to indicate to us that the market is getting better for real estate pricing.
So this first graph, this shows the total active listings in blue versus the total pending listings. You can see in 2008, there was much more active listings than what was actually going under contract. And then we look towards the end of the graph, into the first quarter of this year, we see these lines starting to converge. We have less listings on the market and more going pending, thus creating a squeeze and an increase in price.
This convergence is very, very healthy for the real estate market and also for people that are looking to invest in real estate and increase their net worth.
Yeah, and if you look back to the beginning of this chart in 2006, how close the lines were, we're not quite there, but they're definitely converging.
There's going to be time. The next chart we have here is total units sold. So what we use is a rolling average here of the past 12 months and the past 6 months. But hidden in here is something that's really, we think, a very good tell for where this market is going. If you look at the very end of this chart, where the blue line is, you see it going slightly down. So the past 6 months, we've had actually total units sold has decreased ever so slightly, but demand hasn't. So you want to talk about that?
Well, we think that with this decrease in total units sold, it's actually, it's not that less people are buying, it's the fact that our inventory is so low right now that there's so much demand, but there's just not enough property on the market, so sales will naturally decrease with there, even though we're selling, I think, 65 or 70% of all properties listed right now.
It's looking good. That's a very good indicator. Let's go on to the next slide.
So this slide is the total units listed versus the total units sold in the past 12 months. Blue is total listed, red is total sold. You can see in 2005, 2006, we were selling probably about 80% of the properties.
Yeah, it was hot. It was hot out there.
And then from April 2009 up to March of 2013, you can see our solds have steadily increased, and at the same time, our total properties listed has steadily decreased.
So if you look at November 03 through about May of 06, or a little early, December of 05, you can see those lines coming together. And we're very, very early in this cycle right now. Mm-hmm. We're seeing the market turn. We've bottomed out, but by no means do we think this cycle is anywhere near even in the middle. We're at the very beginning here. There's going to be money to be made here, we think, over the next 5-7 years.
Yeah. And then this graph touches on dollar volume sold. Again, blue is past 6 months rolling average. Red is a past 12-month rolling average. You can see our dollar volume has increased in both categories, and this is just, and our sales have actually decreased slightly, so suggesting an increase in price.
And this also confirms that, and if you've been watching our webinars, we've talked about this in the past. If you go back and look at our chart right here in December 08, the bottom's in, everybody. Mm-hmm. And the really, really good news is interest rates are at least as low or lower than it was at the bottom. Let's look at a final slide here now. Let's look at the single-family home median sale price. And the reason we put this last of these last 4 slides is this actually confirms what we've been talking about. In other words, there is a convergence. There's less property for sale. There's more buyers trying to buy those properties. And as a result, just the beginnings, what we think, of a price increase. You can start seeing it here starting the end of December of 2011, and now we're starting to all of a sudden see that chart go up in median sale price. This is extremely healthy, and also it allows you to see that we are very early in this cycle if you're thinking about investing in real estate.
Yeah. And I wouldn't be surprised if next quarter when we report on this, it presses up above 600,000.
I think we're going to see some numbers move up here. It's going to be really good. So come join us on that. So we looked at the market signals, which are the interest rates at 50-year lows, the real estate increasing in value. Let's talk about the stock market and its what's been happening there. So we're looking at the Dow Jones Industrial Average from 2008 to the present, and we can see a steady climb. The bottom's in the stock market too. There'll probably be some corrections. But again, this is a healthy long-term indicator that the economy is turning, despite what maybe you're hearing on TV and the news, or even your neighbor being out of work. It just means that generally speaking, the economy is moving forward. And it usually presages that real estate will follow.
Definitely.
We think this is a great indicator.
And then our final graph we're going to show is the U.S. unemployment graph. 2008, it sharply rose to about 10%, and then it's steadily been decreasing, and then as of now it's at 7.6% U.S. unemployment. So again, unemployment's going down, stock market's going up, got less inventory, prices are on the rise with real estate, the stock market's increasing. And
more people employed means more homes are necessary for the demand. And this all points to what we think is a cycle for real estate that's moving in an upward direction. And we'd love to have you participate in it with us.
Yep, because we're participating.
Yes, we are.
To recap our Spring into Action webinar, short-term rental season is over. It's going into the carrying season. Now, and with homes or condos that you have long-term rentals in, these rents are increasing.
They're definitely increasing, and one of the great ways is to look in the park record in the classified section. I monitor that, and you may want to do that too through the internet. And you'll see that rents are up. There's not that many homes for rent, and that is a very positive part of our market also. And when you couple that with the fixed interest rates at 50-year lows and rents moving up, this is a wonderful time to buy an investment or a second home up here in Park City.
And then we also had all that data we just shared with you that does confirm prices are moving up, inventory is shrinking, this market's really getting hot.
And the stock market confirms an overall healthy recovery for the U.S. economy.
And finally, unemployment is decreasing.
So we'd like you to spring into action and give us a call, and maybe we can help you identify some properties. And we have a best buys list, is that correct?
We do have a best buys list that we can share with you. It goes from condos, homes, land. We just compile the 10 best properties right now, in our opinion, that are the best value. And
we even have a webinar coming up that we're going to talk about the 3 or 4 or 5 best places that we think within the city are really good places for investment over the next few years. And that'll be coming up. So keep watching our seminars, our webinars here, and we'll be talking about that. And of course, you can call us at the phone numbers listed on here. And we have email addresses down below.
Yep, so you can email us 24 hours a day, you know, 2 o'clock in the morning, 3 o'clock in the morning, whatever. We'll
the beauty of the
net.
wake up. We're not going to wake up at 2 a.m., but we'll get back to you in the next morning.
Then we'll go to sleep at that time.
And feel free just to call us with your questions or concerns so that we can address them and help you decide whether or not this whole time is a really good time for you to invest or not.
Yeah, so we got Jeremy at the Wilstein team or Ed at the WilsteinTeam.com. We'd love to help you out and just sprung into action.
Yes, come on out and enjoy Park City if you get a chance to. So I'm Ed Knapp, the old guy.
Jeremy Wilstein, the young guy.
I'm wishing you the best.
Thank you.